You are about to explore an investment delivering, well, truly extraordinary returns, making traditional benchmarks seem almost slow by comparison. We're talking about an ETF that's recently showcased a 152.91% dividend yield. Yes, you heard that right. And an astounding 175.8% total return just since February 2024. This is insane. You won't believe what we're about to deep dive into. You're with Channel Vest. This is your analysis. Okay, so today we're taking a deep dive into the YieldMax MSTR Option Income Strategy ETF. You might see it as MSTY. It's definitely an investment strategy that's generated significant buzz, and for good reason based on those numbers. But look, before we get deeper into these, frankly, impressive figures, we have a really critical message for you.
Absolutely. Yeah, before we unpack these incredible numbers, it's just vital to understand that this deep dive, it's strictly for educational purposes only. Look, this is not investment advice.
That's a crucial point. Really going to anchor our discussion there. Because what MSTY offers is, well, it's pretty unique. It gives you exposure to Bitcoin, but without directly owning Bitcoin itself, which is interesting. It does this by focusing on MicroStrategy stock, MSTR, using some very sophisticated option strategies. And what's truly astonishing, that income. It's currently paying an extraordinary monthly income, boasting a 152.91% dividend yield. That comes out to monthly distributions averaging about $2.08 per share. Just think about that for a second. And on top of that income, the performance has been, well, exceptional. 175.8% total return just since February 2024. To put that in perspective, that's outperforming the S&P 500 by a staggering 164.6 percentage points in that same short time frame. It's a huge figure. But like you just highlighted, with such high potential rewards come equally significant risks. We mean extreme volatility. We're looking at a 73.32% standard deviation and other substantial risks too. So definitely stick around because understanding the full picture here is paramount.
So yeah, how does MSTY actually achieve this unique blend of indirect Bitcoin exposure and that high income?
It's quite an elegant structure, actually. Let's try and simplify the mechanics. Think of it in like 3 core steps. First, MSTY primarily holds U.S. Treasury securities. These make up a big chunk, 76.57% of its assets. They basically serve as a very stable, kind of safe collateral base for the fund's operations.
Okay, let's unpack that a bit. So the foundation, the bulk of it, is solid low-risk assets. That provides some stability here. But then how does it actually connect to Bitcoin? Where does that piece come in? Exactly. So that brings us to step 2. Generating that Bitcoin exposure. MSTY uses options contracts. It uses them to create what we call synthetic exposure to MicroStrategy stock, MSTR. Now, synthetic here basically means the fund simulates the price movements of MSTR without actually holding the shares directly. Think of it maybe like a contractual agreement. It gives you the financial outcome of owning the stock, but, without the physical ownership. And MSTR itself, well, it's a key player in crypto, right? It acts as a proxy for Bitcoin because it holds so much Bitcoin on its balance sheet. So through MSTR, you get that indirect Bitcoin-like performance.
That's actually fascinating. So it's a clever workaround, really, a way to play Bitcoin's movements and get income without buying the crypto yourself. Okay, and then step 3, how does it actually generate those huge monthly payouts?
Right, that's the income engine. MSTY sells call options, specifically on that synthetic MSTR position we just talked about. Selling these call options is what generates those large monthly income payouts. By selling these options, the fund collects money, right? Premiums. This strategy lets MSTY capitalize on the volatility and hopefully the upward movement of MSTR. It basically converts that market action into regular distributions for investors. All while, its main assets sit in those stable U.S. treasuries. It's a strategic way to capture income from market fluctuations, basically.
Wow. Okay, so when we look closer at the numbers, MSTY's performance really does stand out. Since inception, February 2024, it's delivered that 175.8% total return. That's huge. And that 152.91% current annual dividend yield. That translates to an average monthly payout of $2.08 per share. They're very significant figures, no doubt. However, like we said earlier, this comes with that 73.32% volatility. That standard deviation number is exceptionally high. It signals considerable price swings.
Yeah, and what's particularly noteworthy here is that MSTY has actually ranked in the top 1% of performance in its category over the past year, which just shows its aggressive strategy can deliver exceptional results, when market conditions are right. And this is critical. You have to understand that this level of performance often correlates directly with a very high degree of risk and price fluctuation. It's definitely not a smooth ride.
You won't believe how much it's crushed the market. You'll be astonished by how MSTY has navigated things compared to the S&P 500. The difference is, well, it's pretty stark. Let's just look at the comparisons head-to-head. Year-to-date in 2025, okay, MSTY up an impressive plus 32.79%, S&P 500 plus 8.62%. That's MSTY outperforming by 24.17 percentage points just this year so far. Now look at the past year. MSTY surged plus 92.03%. The S&P 500 gained plus 17.03%. That's an outperformance of 75 percentage points. Huge difference. And since inception, remember February 2024, MSTY plus 175.8% total return, S&P 500 plus 11.2%. That's an incredible outperformance of 164.6 percentage points. These numbers are truly astounding. It's not even close, is it? But before you rush to invest, we need to talk about but wait, there's a catch section. This is crucial for you.
Indeed, yes. While the returns are absolutely attention-grabbing, it's imperative really to understand the significant risks involved. First off, that extreme volatility, that 73.32% standard deviation number. It's not just some statistic. It means you should realistically anticipate wild, rapid price swings. Big ups, big downs. And to put it into perspective, MSTY has actually experienced a maximum drawdown of negative 40.82%. What that means is at one point, you could have lost almost half your initial investment. You got to be ready for that possibility. Then there's single stock risk. This is major. MSTY's performance is almost entirely dependent on one stock. MicroStrategy, MSTR, period. If MSTR experiences a significant downturn, well, so does MSTY. Its fate is really closely tied to that one company, and by extension, to Bitcoin. And finally, a major concern is NAV erosion risk. This is a bit tricky. While those high distributions look great, a substantial portion can actually be a return of capital. That means it's not new income being generated, but literally a return of your own initial investment money. In fact, 86.81% of recent distributions were classified as return of capital. Think of it like getting a regular payment, but it's partly coming from your initial pot, right? Which can potentially shrink the overall value of your holding over time if new capital gains don't make up for it. This is super critical for long-term investors to grasp.
Okay, wow. So what does this all really mean for you, the potential investor? This is absolutely not for the faint of heart. Let's be clear. You need to be prepared for those wild swings. You need to understand that those big payouts aren't always pure profit, right? And you have to acknowledge that concentrated risk tied to MSTR and Bitcoin. So, okay, what's truly driving all this incredible, yet obviously volatile action we're seeing with MSTY?
Right, the robust performance of MSTY, it's driven by a powerful combination, really, a confluence of underlying factors. The most significant, no surprise, is the surging Bitcoin price. Bitcoin's recent trajectory, pushing it to over $122,000. That directly fuels MSTR's stock price. MSTR has climbed to approximately $4,402. That represents an astonishing 98% year-to-date gain for MSTR stock itself. Just massive. And compounding this is MicroStrategy's own asset Bitcoin holdings. MSTR holds a staggering 226,331 BTC. They bought it at an average cost of about $42,700. So this strategy has resulted in a colossal 185% unrealized gain for the company on its Bitcoin stash. This makes MSTR stock incredibly sensitive, leveraged to Bitcoin's price movements. And finally, options volatility itself plays a critical role, just the nature of the options market. High volatility directly translates into higher option premiums, which means larger potential distributions for MSTY. It's a key component of how the fund actually generates its income. It's effectively monetizing that inherent market shopping.
It really is a perfect storm of factors, isn't it? Just all coming together. So what happens when you pit this titan against its rivals? You won't believe how it stacks up against the competition. Stick around. And hey, if you're finding this deep dive valuable, if you want to stay ahead of the curve, smash that subscribe button. Seriously, never miss our next financial breakdown. Hit subscribe for more videos on high-yield investments, crypto strategies, and financial analysis that could, genuinely change your portfolio forever.
Okay, so when we compare MSTY to its peers, right, other ETFs in this yield-focused options strategy category, its metrics really do stand out. Let's look at a few quick examples. MSTY, with its MicroStrategy focus, currently boasts that 152.91% yield, and importantly, an impressive 1.38 Sharpe A ratio. Now, the Sharpe ratio, just for clarity, measures an investment's return relative to its risk. So a higher number basically indicates better risk-adjusted returns, more bang for your risk buck, sort of. Now, in contrast, look at NVDY. That one focuses on NVIDIA. It offers an 82.21% yield, still high, but with a 0.79 Sharpe A ratio. Lower risk-adjusted return. TSLY, based on Tesla, provides a 128.45% yield, which is very high, but a much lower 0.35 Sharpe A ratio. Suggests a lot of risk for that return. And ULTY, which holds multiple stocks, has a 121.57% yield and a 0.94 Sharpe ratio. Pretty good, but still behind MSTY on both counts recently. So what's clear when you look at these is that MSTY, at least right now, presents both the highest yield and the best risk-adjusted returns based on that Sharpe A ratio within its direct comparative category. It's definitely a leader in its particular niche.
Okay, so it's a leader in its space, a front runner in the specific category. But, and this is the big question,
What if Bitcoin's famously wild ride takes a significant downturn? We're about to dive into the potential futures for MSTY, looking at everything from, boom scenarios to a more challenging bust.
Right. Understanding these potential trajectories for MSTY is absolutely crucial for anyone even thinking about it. We've outlined three main scenarios, basically tied to Bitcoin's potential price movements. First, the below case. We estimate maybe a 25% chance of this. This envisions Bitcoin reaching somewhere between $150,000 and $200,000. In that scenario, MSTY's net asset value, its NAV per share, could significantly climb, maybe to $25 to $42. The yield might stay very strong, 75, 125%, leading to, well, an incredible potential total return of 250, 500%. Huge upside. Then there's our base case. We've assigned this a higher probability, maybe 50% chance. This anticipates Bitcoin stabilizing, perhaps trading between $80,000 and $120,000. Here, MSTY's NAV would likely settle somewhere between $18 and $25. It would probably still offer a respectable yield, say 45, 75%. This scenario suggests continued but more moderate growth. And finally, the bear case, also about a 25% chance, we think. This considers Bitcoin falling significantly, maybe down to $25,000, $40,000. In this really challenging situation, MSTY's NAV could drop considerably, maybe to $8 per share. A really tough outcome.
Wow, okay. This is truly where your personal risk tolerance just becomes the absolute defining factor, isn't it? Such a wide spectrum of potential outcomes. It just means a really clear, honest understanding of your own comfort levels is essential. So with these potential scenarios laid out, how much should you actually consider allocating to MSTY, if anything at all?
Yeah, look, given the inherently volatile nature of MSTY, the allocation decision needs to be highly customized. It depends entirely on your individual financial profile and stomach for risk. For a conservative investor, okay, maybe someone in retirement or primarily focused on stable income. A very small allocation, perhaps 2-5% of the total portfolio. And that would be purely as maybe a yield enhancement tool, something to potentially boost overall income slightly. With discipline, quarterly rebalancing, checking in regularly. Now for moderate investors, maybe typically aged 35, 55, with a more balanced portfolio, they might consider 5-10%. Perhaps viewing it as a growth catalyst alongside diversified index funds, but they need to be monitoring it more closely, maybe monthly. Then you have aggressive investors, often younger, under 35 maybe, who possess a genuinely high tolerance for risk and are seeking maximum potential returns. For them, maybe a 10-15% allocation might be contemplated. But this comes with the need for almost constant vigilance, like weekly monitoring. And finally, there are tactical traders, people actively trading the market. They might use a variable allocation, say 3-8%. They'd be adjusting their position frequently, maybe even daily, based on market conditions, technical signals, that sort of thing. The key takeaway here is know yourself, know your risk tolerance, and size your position accordingly. It's absolutely critical.
Yeah, it's definitely not a one-size-fits-all solution. That much is crystal clear. And it's obvious that if you even consider investing in MSTY, it's about aligning it very carefully with your individual strategy and being, like you said, brutally honest about your appetite for risk. Which brings us to maybe the most critical segment of this entire deep dive. How do you effectively manage the substantial risks that are just inherent in MSTY?
Right. This point, honestly, it cannot be overemphasized. Essential risk management for MSTY is just paramount. It's non-negotiable if you're involved. First, position sizing is critical. We mentioned the percentages, but let me repeat. You absolutely must limit your exposure to MSTY. Keep it to no more than 2-5% of your total investment portfolio. This is your #1 defense against a catastrophic loss from this single volatile holding. Second, stop-loss discipline is also critical. You need a plan before things go wrong. Setting a hard stop-loss order, maybe around $16, or implementing a 25% trailing stop, that can help protect your capital from severe downturns, especially during those rapid market shifts MSTY is prone to. Don't just hope it comes back. Third, taking profits is highly recommended, seriously. Given the extreme volatility and the potential for quick, substantial gains, we saw that 175% number, it's prudent. It's smart to consider taking 25-50% of your profits off the table once you achieve, say, plus 100% returns on your initial investment. Lock in some of those gains. Don't get too greedy. And finally, diversification is hugely important. MSTY should never be a standalone investment. It absolutely must be part of a broader, well-diversified portfolio. We're talking 5 or more distinct asset classes, ideally, to help mitigate its concentrated single stock risk and its sector-specific crypto risk.
Hey, don't forget to like this analysis if you found it helpful, and subscribe for more in-depth financial content just like this.